Lamon, if you don't mind, give us a little bit of, your background, your bio.
By training, a management economist. I studied international economic management. And by pure coincidence, in my first job, I was dropped into the financial sector. Specifically, international donor agencies wanted to get rid of government in grain trading and grain finance in Mali, in West Africa. And the ways that they were doing it were, let's say, failing, because it turned out that the private sector was not exactly ready to take over those roles. I came in the second year of that liberalization policy, and I was basically told, we're in problems. If you can find a solution, go ahead. I then basically went ahead by setting up a market institution, which I now know is known as a warehouse receipts system. I think your generation would call it a commodity token. And I basically set up this tokenization system that allowed mid-sized traders to start basically financing grain stocks. So they were now able to continue buying. They didn't have to buy, sell because of working capital problems. Which meant that farmers also were able to get better prices. Consumers paid lower prices. It was a huge success, was replicated not just in that same country, but in several other countries. So that was my first experience. It basically showed me, you have a problem, market institutions could actually provide a solution. And then, by another accident, I was recruited into the United Nations, and I was told exactly the same thing. We have a problem. I was put into the commodities division. And the commodities division of the United Nations had been trying to set up OPEC-type arrangements. All these arrangements had collapsed. The last one had collapsed just a couple of months before I started in Geneva, in the UN. And I was basically told, well, we don't know what we can do in commodities. If you have any ideas, let us know. And I was actually asked to write the commodity policies for the Secretary General. I did that, and I basically took my experience in West Africa to say, okay, you can't control the waves. Can we teach people to surf the waves? Can we build the institutions that allow people to deal with these market forces? And out of that, I got an incredibly strong mandate, really pretty amazing. I was very young at the time, but my program was endorsed by countries all around, from the US to Africa to Asia. And out of that came a pretty big program on basically commodity exchanges and what we call structured commodity finance. And the simple form of that is warehouse receipt finance. And I did that for quite a long time, 15 years or so, in the United Nations, in the World Bank, helping, empowering countries to use these markets, but also helping them to set up new markets, new exchanges, new financing systems. Then at a certain moment, I got the offer to move to India, to one of the exchanges that I had helped create. And I was offered the possibility to become CEO of that exchange. You take these opportunities. I was still young enough, and I moved to India to basically help develop an exchange called MCX. Well, that worked quite well. MCX became the second largest exchange in terms of contracts traded after the Chicago Mercantile Exchange. My last year, we did around $3 trillion worth of commodities. I left after doing an IPO at $1.5 billion. Basically, I've stayed most of the time on that side of the fence, private sector, assisting in the development of exchanges in many other countries, including many years in Indonesia, most recently Saudi Arabia. But I've continued supporting, advising international organizations like the World Bank and FAO. So that's basically my experience. I've been on the international side, international organizations, and the private sector side, had my hands dirtied by the actual work of building an exchange. But I've also been in a lot of advisory functions.
We always talk about empowering inclusion and giving opportunity, giving access to either global markets or financial tools. So just to go back to your experience, what is the impact that a commodities exchange can have on an underserved community or a growing community that is about to do their big step?
The impact can be quite significant. The UN UNCTAD, for example, identified more than 60 positive impacts. I'm really generalizing here, but the two big groups of impacts, one is empowerment and the other is enabling. Empowerment, when I traveled in India in the 1980s, during the harvest season, I saw long lines of farmers standing in front of small cubicles. Why was that? These farmers found it worthwhile to wait in line just to get a price one time a day. Okay? The power of prices and the way that people are able to act on prices should not be underestimated. And an exchange basically collects those prices, pushes them out actively in all the ways it can think about, and this changes people's market power. In India, what we found was that rural markets no longer opened early in the morning. They opened only after our exchange opens. Because after the exchange is open, we push out price information. So farmers prefer to wait until we were open and they had that price information. That's just one aspect of the empowerment. Another one is that you basically enable farmers to split the decision to sell and obtaining cash, because you allow them to do forward sales. And that means that the farmer who doesn't like the prices today can deposit his goods in an exchange warehouse, get finance against it, and sells in the future. Now, imagine what impact this has on bargaining power. Okay, but there are many other empowerment aspects, including, by the way, for traders, that are quite important. Enabling is also terribly important. Again, there are many enabling effects of an exchange. One is on finance. In India, banks used to run away from farmers. After we got into the markets, banks actually came to us, to one of our subsidiaries, to use as their agent for providing farmers with finance. Billions of dollars a year started flowing into farmers' finance by banks who previously, had to be hit with a stick to even think about that. Now, why is that? Because with an exchange gives you surety. It tells banks this is the value of the commodities. This is where the commodities are. This is their quality. If something goes wrong and the farmer doesn't pay me, I have those commodities and this is the market where I can sell them. The confidence that this gives to banks is enormous. And this actually allows a lot of finance to flow into rural markets. This is not just in India. The UN has found similar effects in many other countries.
You talked about your experience from, building the second largest commodities in the world, working in the commodities sector in UN. And now here we are talking about Palmyra, which is something fairly new, if you will, in terms of technology and what will bring as solutions to these people. So I wanted to ask you, what are your thoughts about Palmyra, what we're trying to do, and the solutions that we're trying to bring into the space?
Commodity exchanges in general, are technology companies. They weren't like 40 years ago, but nowadays they are. But they're not necessarily good at using technology, partly because of legacy issues. If you have big systems on certain technology, all your brokers use the same or link to those same systems, very difficult to innovate. And that basically means that for a lot of exchanges, new technology was just used for a better way to doing things they were already doing. They were not used to do new things. And I think that you actually have a whole new set of tools in crypto. I mean, for me, that's what crypto are. They're a toolkit. So you have a lot of different tools that are all good at certain things, with which you can do things that commodity exchanges haven't been doing so far. That has big implications. You basically can provide as an exchange services you couldn't provide before. You can do contracts that you didn't do before. You can do smaller contracts that normally would have made sense in an exchange. Frankly, a lot of the crypto initiatives in the commodity space that I've seen are completely blind to the realities of the commodity space. I mean, some of them, I don't know whether I have to laugh or cry if I see how much money has been poured into some of those ideas. But I feel that Palmyra actually understands already a lot and wants to understand everything. And, for me, that's terribly exciting because I'm an economist. My background is not in technology. I'm curious about it. But you people in Palmyra, you know what technology is. And for me, it's very exciting to be able to work with a team that knows something much better than I know it and still make my experience, my knowledge relevant for them.
Some people know about the technology, but most importantly, now with you on board, we have people that know about commodities and have building things from ground all the way up on the Web 2 world. You coming and seeing what we've been doing for the past year and a half and seeing the vision and the potential of this really gives us a lot of strength and a lot of willpower to keep pushing forward and build this commodities exchange and bring these tools to underserved communities and really lift everyone up. Because I think this is one of the most empowering things when we talk about crypto is the solutions, is what can we do to bring everyone a step forward, and at the same time everyone can get the value out of this as well, which is, yes, it will be, more money, yes, it will be better livelihoods for the people that are working on the field, and in the end of the day this will all trickle down and will help the whole community or country even. I just wanted to thank you very much for giving us your insights, talking about your experience, what you've done in the past, and the things that we're going to be doing together in the future.
Thank you very much. I'm very excited about the opportunity.